Hello everyone, welcome or welcome back. My name is Venus. Today we're going to be talking through Microsoft DCF valuation, and also I will share my thoughts on where the stock is going to go, and we will all take a look at the technical charts all together. And if you're the first time in this channel, welcome. And here we talk a lot about stock investments and share my past experiences of building my own net worth from 0 to 7 figures through a lot of investing and saving. So without further ado, let's jump right in. So this is a discounted cash flow model, and I will talk you through the most important key elements goes into this model, which helped me to come to the conclusion of its implied share price. So here are the assumptions I highlighted in yellow. It's revenue, gross margin, it's EBIT, and tax, and also the D&A, which is in its depreciation and amortization, capex, and as well as the WACC. So some of the most important assumptions here are the revenue, the gross margin, and its EBIT margin. So for 2024, because Microsoft fiscal years ends in the middle of the year, so right now we're actually already 2 quarters into the 2024 of the year. So I use the year-to-date number from 2024 and then multiplied by a 0.5 factor because I believe Microsoft will continue to grow. And looking at roughly 12% growth rate for its revenue for the year of 2024, and for its gross margin, and it will likely maintain at 68-69% range. And again, I factored in another 5% of growth from the year-to-date number. And the same thing applies to the operating margin, which is I'm looking at 44%, which I feel comfortable with. And for the future years of the revenue projection, so those are the numbers I believe are the most consensus I've saw from the analysts. So I personally also agree that Microsoft will continue to grow between 15 to 16% over the past few years, kind of maintaining the same growth rate. And later in this video, we will talk through why I believe this is a reasonable case, and we'll look closer in its business sectors. But now let's focus on our DCF model, and after you put in the majority of the key assumptions in D&A and capex, I basically applied a very similar range to its past few years. So this is the average, what I'm using. And now it's coming to another very key factor that's impact its valuation, which is the WACC, the weighted average capital cost. And Microsoft have a relatively low WACC because the price fluctuation from the past few months has been fairly stable, and 0.89 beta is a very, very low beta for any of the companies that I have done evaluation so far. So now we're looking at 8.2% WACC and plug that in, and that will get us to the implied share price, which is $330. And this basically implies a 29% downside from its current stock trading price. So now let's take a look at the Microsoft High evaluation case, which is actually close to its current stock price. So this basically has to take Microsoft's future couple years growth from the 15% we had in the other spreadsheet all the way over to 20%. And I was using the same gross margin and EBIT. So the key changes are really higher, slightly 5% higher growth from the previous version of the model. If Microsoft will be able to achieve that, and the implied share price will be $436. And on the low case end, if Microsoft can only maintain a 10% growth, and the implied share price will drop to $257. So there's a lot of factors plays into a discounted cash flow model, and that's not the only way of evaluating a company and stock evaluation. So now I'm going to be showing you other ways of evaluating the stocks. So one way is the multiples. So this is basically using its earnings per share and times its P ratio, which is price to earning ratio, to get to its stock price, which is very, very simple math and very popular method as well. Microsoft have a slightly higher PE if you compare that to other companies like Apple and Google, but it's still lower than higher growth companies like NVDA and Amazon. So if we use an average, which is 46 PE, and Microsoft's stock share will be over $500. And with Apple, if we use Apple or Google's PE instead, which are the lower end of the PE, Microsoft stock price will be around $300 range. And there's another way of evaluating stock, which is Graham's valuation model. So this is coming from the book Intelligent Investor. And because the valuation model has been a little bit outdated, so this is the updated version to be a little bit less aggressive. So we plugged in the growth rate, which is using the 16.5%, which is the same as our base case for the next few years of the growth. And that will bring its intrinsic value to close to $400. So this is definitely a very optimistic case, I would say. So far, let's summarize. With DCF valuation model, I think the reasonable price to me is anywhere between $300 and $330. So right now the market is trading at the high case of Microsoft, basically assuming that they had to increase 20% of its revenue for the next few years for it to be achieve this implied share price. So now the question is from the technical chart where the stock is going. So now let's take a look at that. So I have my Thinkorswim pulled up. If you look at Microsoft's stock chart, it's very, very clean and very simple and easy to understand. A couple of things to call out here is, number one, that we're trading at the highest, basically. So that's why I'm saying that right now it seems to be too optimistic from my liking. But if the stock ever trades back around the 330, kind of the mid-range of here, and that's where I'll be very interested in looking to adding in of my position. And also from the $313, there's very strong support here. So I will be very interested in looking in this area from both a technical and fundamental analysis perspective. Another thing to call out is Microsoft has been holding this 200-day moving average very well. It slightly dipped for a day or two, but it quickly bounced back. So which is a very bullish sign for me to see, because there are stocks dipping below and stayed there for much longer, and which adding to a lot of uncertainty of the stock. So I would say Microsoft is one of the stock that has been very, very strong for the past few years in terms of its trajectory, and I will be very interested in keep watching until below the $350 range. So now let's go back to the question I raised a few minutes ago, which is how I think about the future growth of Microsoft, which is one of the most important assumptions here for this model. So I want for us to be able to better predict the future. So one thing that I want us to look into is the history. The history always repeats itself. So let's go back to Microsoft's 10K. So I'm on the last year, their fiscal year 2023's 10K. So here are a few of their financial key highlights from the fiscal year 2023 compared to the prior year. So a couple things to call out here. So you will see a overall trend with Microsoft's business. So number one, their intelligent cloud has been driving the growth, and their productivity suites, Office and Dynamics has been driving very strong growth. LinkedIn has been served as a growth driver as well, and their cloud server products has been driving an overall strong growth. So those are the key growth parts of Microsoft's business. And now let's take a look at the business where it starts on the declining phase. So one is their OEM licensing business on Windows. That's where Microsoft started. That was their cash cow business, and now from the year of 2023 was a 25% decline, which is very, very significant for a company like this size. And their Xbox revenue also has been decreasing. So basically what this tells me is that Microsoft has figured out a way to shift away from the core of the core where they started, and created another completely new growth area, which is cloud for themselves, and using cloud as one of their key growth driver, even though their Windows business was declining in the past year quite significantly. And if you think about other companies which started around the same time as Microsoft, many businesses weren't able to thrive or even survive in a situation where their cash cow business has been declining. Another interesting point here is the search. search and news advertising revenue has increased 11%, and that I believe can be attributed to some of the OpenAI collaboration, and that I believe is another smart move from Microsoft to collaborating with OpenAI and bring that into their search and a lot of their other products. So I'm very, very positive about Microsoft's future case. Not only Microsoft knows how to drive its key growth, but also another very impressive characteristic of Microsoft to me is that they know how to manage their risk and they know how to cut down their costs and make their company operate in a more efficient way. So here is a section about the economic conditions, challenges, and mentioned a lot of stuff that a lot of companies in these sectors are facing. But here's something that they did. I think it's a great call out. So basically, this is telling us that they recorded a $1.2 billion of charge, but this charge is actually a one-time cost for them restructuring the company, which includes a severance package of the employees because they made a major workforce cut throughout the fiscal year. And so that's one thing for them to improve their productivity and reallocate their talents in those growth sector of the business to increase its competitiveness. Another thing that's interesting is it talked about the impairment charge resulted from the hardware portfolio. So this is, if you do the math, that's probably around $400 million. So this is basically telling me that Microsoft potentially cut some of the hardware business that doesn't generate profit or they don't see a very positive path from there, and they just cut it out, recognize the loss, and take a one-time hit from it and move on. So those are the very positive traits that I see from Microsoft, that they're able to make decisions and cut out the things that doesn't work for the business very, very quickly and improve their efficiency and continue focus on its growth. So those are all very positive characteristics. So now let's wrap up, and I want to share my final thoughts on Microsoft. So again, from the technical chart, right now Microsoft is trading in the very, very high valuation range, and I will personally looking for a dip until Microsoft regress back to around its intrinsic value price around 330, 300. So I will be looking out anything between $350 to $300, and that will be a comfortable range for me to add into position. Again, this is not investment advice. Make sure you do your own research. I made another video about Apple, which I think between Microsoft and Apple, they have some similarity. And if you want to hear my thoughts on Apple, make sure you click on this video. And I also had another full walkthrough of the DCF model for NVDA, which I walked step by step, including the calculation of this model, and make sure you check out the video there. And I have the model linked down below in the description box, and feel free to grab a copy before you go. And thank you so much for watching. Subscribe, and I'll see you next time. Bye.